Happy Tuesday out there, Team 42. It's your skipper here at Darius to present our macro minute for Tuesday, November 26th, 2024. As always, we'll start with the executive summary from today's leadoff morning note. If you would like to review the analysis supporting these conclusions, as well as what specific changes you need to make in your portfolio to remain on the right side of market risk, you need to be a client of 42 Macro. So today's key macro question is, were asset markets correct to celebrate President Trump's market-friendly cabinet? Our answers are, if you're an investor and this is not your most discomforting and unresolved question at the current juncture, I dare say you're not paying attention. Less than 24 hours after watching the U.S. stock and bond markets cheer on his nomination of hedge fund manager Scott Bessent as Treasury Secretary, President Trump vowed day one tariff action against the U.S.'s three largest trading partners, China, Mexico, and Canada. Investors must be cognizant of the downside risk to asset markets stemming from the sequence and scope of U.S. fiscal policy changes. It may be the case that a negative supply shocks from tariffs and tight borders occur before the positive supply shocks from tax cuts, deregulation, and accelerated energy production. Perhaps markets can look through the negative supply shocks as one-off level changes to prices and labor supply, especially if DOGE cuts to federal government employment offset the pending labor supply issue and are celebrated by the bond market via sharply lower yields. A kitchen sinking of the economy and asset markets is a real possibility in 2025, given that President Trump has air covered hashtag blame Biden if he does. Lastly, the S&P 500 and Bitcoin are up 56% and 167% respectively since President Biden assumed the Oval Office, inclusive of the largest fiscal retrenchment ever and the fastest monetary tightening in 40 years in 2022. The hurdle for implementing incrementally market-friendly policies is not exactly low in that context, or in the context of an S&P 500 trading at 25 times forward earnings and credit spreads that are as tight as they've been since 2005 and 2007 in the investment grade and high yield markets, respectively. Remember, Democrats invest too, and they may not appreciate significant changes from a U.S. fiscal policy perspective. And P.S., I'm neither a Democrat, I'm not a Republican. Don't come at me on Twitter. Don't come at me in my inbox. I'm neither. I represent neither party. I'm just doing my job as a macro risk manager. It's a very important job. We have thousands of clients who are counting on me to do my job effectively, and I really appreciate that. And so transitioning to our client dashboard is always a wrap up with a question from our community. This one's regarding our most recent Around the Horn from Friday, November 22nd. It says, hey, Skipper, wow. Your scenario analysis, the last portion of the Around the Horn from Friday was fascinating, better than Netflix. Your observations, potential concerns, and energy are a pleasure to watch. Thanks, man. Appreciate you. And so on a Bitcoin note, as you said, because of you, my girlfriend and I have made thousands in this space that normally we would not have. I don't care if Bitcoin rises another rises after KISS changes, but I just want to know what KISS recommends. And so we just want to say we appreciate that kind feedback. Obviously, we have, in my opinion, some of the world's best testimonials out there, certainly in the institutional finance space, serving retail investors. And I'm really grateful for that because our team works really hard and I work really hard to produce exciting, superior outcomes in our clients' portfolios. And, you know, knock on wood or Lord willing, we continue to do that. And I believe we have the systems, the systematic procedures set up in place to do that. So we're going to keep chopping wood, and we're going to navigate, this next 4 years of administration, just like we navigate the last, with, with tact, with class, with thoughtfulness, and ultimately with, our performance, because that's what we do here at 42 Macro. So we'll catch you back here tomorrow.